have Nuresh and Kunal joining us now, and Sandeep Sabharwal, who will also join in minutes. Okay, he's there, right there. Let me take the discussion forward with Sandeep then. Sandeep, you've been you've been on the mutual fund side yourself. How do you read the commentary coming in, or the nudge or glare from the regulatory side for mutual fund community, which was seeing very concentrated flows in their small cap, mid cap schemes last few months? Regulator has called that space slightly frothy right now. And whatever happened yesterday and the first half of today, what is your take? Will it help cleanse the froth?
Yeah, hi. So I think there are various ways to see frothiness. So there is frothiness in various parts of the market. For example, you look at the IPO market, the kind of valuations at which IPOs come, they are very frothy. You look at SME valuations, or the way SME listed stocks, which too many people don't monitor, move. So I think there's bigger frothiness and fear there. I believe that as far as mutual funds are concerned, mutual funds, small and mid cap funds are very large in size in general. Like there are some smaller ones also. And to that extent, for them, whether they restrict flows for a few days, few months, or they don't restrict, it won't make too much of a difference because they are not going into very low value speculative stocks where the retail investors might be getting trapped more and more as they look at market investments and they invest of their own. So, if flows are restricted into small and mid cap mutual funds, what does the investor do? Does he stop investing in small and mid caps, or does he look at other routes which might be riskier for them? So I'm not sure what's the end to it, but then that's how it is. So if that's the way the thinking process is right now, it's fine. Let's see how it goes.
The second half of the day, let's see whether further selling resumes in the small cap, mid cap or not. But that's the nature of the market. It was getting heavy on that end. Triggers may follow, and market will take time to balance them out. Nuresh, Kunal, afternoon to you as well. Kunal, let me start with you. How are you expecting the new series to go by? The way, okay, 22,000 thereabout is what Nifty is, but Bank Nifty, do you see some more participation? It has been lackluster last few series.
Yeah, it has been lackluster, but this series, at least in the second half, we saw some bright signs coming across. We saw HDFC Bank showing signs of recovery for the first time, and after that very sharp and if I can call it a brutal selling for the stock, where it fell from 1650 levels to sub 1400 mark for itself. So this comes as a positive end for the markets, that maybe you might see the stock getting into a stable territory. ICICI Bank making a strong comeback. You've seen Axis Bank also showing signs of recovery, just about the 1050-60 mark for itself. So which means that there is probably an indication that maybe the private sector banking end, which was a major concern for the markets, that end could probably get a lot more balanced this time around, and it may not struggle or get into more of a scattered price action. The PSU banking stocks, of course, have been doing exceptionally well. Even if you look at this last few days of correction for the indices, the PSU banking lot, especially the formidable ones like Canara Bank, Bank of Baroda, SP, etc., these stocks have corrected marginally lower as compared to rest of the PSU pack. So that itself tells you the kind of depth these stocks have had. So I believe on the back of this, there could be a very strong case that maybe Bank Nifty can stand to outperform.
And the Bank Nifty is outperforming right now. But Kunal, a quick word in terms of the rollovers. How is that panning out? Because of course it's a day expiry, but separately the PCR was quite comfortable. The long position was getting extended. Is that something which is continuing into March as well?
Well, put call ratios are intraday ratios. So on expiry day we generally don't take too much heed towards the ratios. But I think on intraday basis it was almost at 0.5, 0.6. When the market started, and those are 0.5 and 0.6 are extremely oversold territories for put call ratios, and that generally indicates that maybe the market is getting into an oversold territory. Rollovers is very important because so what we also tend to see is the rollovers and the sentiment behind the markets for the current expiry as well as going to the next series. And as I mentioned, for example, that there has been a complete change of stance from the market internals. Right now, mid caps, small caps are struggling. Large caps are the ones which are still holding their fort, except for the last maybe couple of days of price correction. But when you look at this largely over the last 2-3 weeks, specifically going into the Feb series, there has been good recovery for many of the large cap names. So I would probably expect that the rollovers going into the next series should be on the lower side, especially on the stock specific and the ones which have been underperforming. For example, the likes of Maruti, which was a huge underperformer for the last so many series. I think that stock can probably see some bit of unwinding of short positions, and same would be the case with many of the private sector banking names.
Naresh, getting you into the conversation, there's a large deal that has happened on Biocon right now, and the other one which is showing a bit of a spike on futures is Berger Paints. Any thoughts on these two charts?
So Berger Paints, I'll be careful because if you look at the March future, the stock is trading at a discount to the cash prices by a big margin. So the spot prices are at 585, 590, and the future prices are at 545. So that's a huge margin. That generally indicates not so a positive thing. So not a buy here. Actually, tough to short also because you cannot short it in futures. So would avoid Berger Paints as such as of now.
Sandeep, how are you looking at hospital space right now, especially in light of what Supreme Court has actually aiming at getting? The proposal is that a lot of procedures could be brought under the standard norms. There's a big differentiation right now. Private hospital, the same procedures versus the public ones. You had exposure in Apollo for some time now. You understand that space. What's the call? Can they fall? Should we get into that fall?
I think regulation in this space possibly could be something which was long in coming because of the fact that these hospitals are able to charge anything which they want, and they can randomly charge any client, any customer very differently from a second customer, and so on. So I think that's what has led to this kind of thing, and the disparity obviously is very huge. So my guess is that with the Supreme Court nudge, there will be something which will come about now, and that could have a negative impact on margins. And these stocks have moved up also very sharply and have outperformed significantly. So I would think that people should be cautious in these stocks at this stage, because any such move, if taken, could lead to a immediate sharp downside.
Sandeep, I wanted to ask you one question on the March seasonality factor. A lot of traders, investors in this month actually book profits in their loss-making position to take advantage or set them off in profit-taking positions. Is it a given or it is very random? Do you think it may happen this March in an accelerated fashion?
It might be very random because that would happen one in the later part of March, and some people would do that, especially who have very high profits and they want to just set it off by booking losses. And that's also sometimes correlated with the general view. So if people expect that as it is, there could be correction going forward. So I think and that view gets reinforced, and we might see more selling. I think it varies across the year, so it's not a given as such.
The other stock we need to mark is Swan Energy. Look at the stock on an intraday basis. The stock has shot up right now, almost 750. At day's high, 3.5%. The news came in half an hour back that they have actually managed to raise almost 4,000 crore in the QIP. 3,300 odd has gone to Swan Energy and 700 odd has gone to the subsidiary, the defense subsidiary. Data will just come up. Oh yes, that's the data. Who are the institutional investors which have come in? Quant has come in, LIC has come in, SBI Life, Leading Light Fund and Dovetail India. These two entities I am not aware of. Appears to be some funds, but SBI Life, a big insurance company, LIC and Quant. Quant increasingly is being seen as the stock picker mutual fund, almost 60,000 crore assets under management. And LIC, of course, is the largest financial institution, domestic one. Naresh, you've been tracking Swan for some time. How do you look at the charts at 745?
So don't track it as closely, but if you look at it, the stock has had a superb run in the last 4-5 months ever since it broke out above the 330-350 mark. At current levels, the risk reward is not say convincing enough to take a long. Rather, time to book some profits. The good news is we are seeing fundraising, etc. done. Or keep a trailing stop loss below 700. Till the time it holds above 700, maybe the momentum could continue. But time to ideally would be to book some partial profits.
Okay, and in the meantime, just taking stock of some of the other buzzers as well, you have Biocon, which is in focus, as well as Gujarat Gas, which is perking up. Do you have a view on either of those names, Sandeep?
Sorry, which ones you mentioned?
Gujarat
Gujarat Gas
Gas
and?
and Biocon.
No, not tracking them closely at all.
Okay, let me toss it across to Kunal then, because I'm sure he's tracking both of these names. What does the chart check suggest?
So both of them are attractive. In fact, Biocon, I did a chart check yesterday on the Chartbusters, mentioning that the stock is completing a major retracement as well as a major period of volatility. So almost a 10 to 15% volatility for Biocon seen in the last 3 attempts over the last 2 months, where the stock has been extremely volatile. But when you look at this with a slight medium-term time frame, say a stretch time frame of 6 months, 9 months, and the stock recovering from the 200 levels, it indicates that there is a bigger trend in the making for Biocon. So I would believe that at current levels, it could be a very good zone to go for a buy at current levels for Biocon. And my expectation is that the levels of 300 should be breached in the next phase of the rally. So with a time frame of say 1 to 3 months, traders could look at least a 10% target for the stock. Gujarat Gas on the other hand, so I think all three names, Gujarat Gas, MGL, IGL, I think all three of them are looking very attractive. They've completed their a minor phase of correction. I think a 7%, 8% broad correction has happened into these stocks from their 2-week swing highs. So I think that also puts the charts back again into at a very interesting level for themselves. So I think closer to 560, 561 Gujarat Gas, we could be looking at the stock getting into a strong demand zone. And if it recovers, then we could be looking at 600 plus as an immediate target.
Look at the small cap and mid cap indices intraday now. It's important to see the pullback which is actually happening. Mid cap index has already broken into the green, and the small cap index has also broken into the green. So that's the case we are talking about. Very sharp intraday recovery, I would say. I want to talk to you about, Sandeep, one space, the pipe space. You remember in the COVID time, there was one pipe stock which went up many times, or even after that, Maharashtra Seamless. But after that, APL Apollo, Mun Industries, many other pipe companies are actually doing well, at least the numbers are showing. Any pipe company, any thoughts on the way, is it Jal for Null or is it oil and gas? What are the triggers the pipe companies are in focus?
Yes, I think the triggers have been twofold. One, the overall, there had been a pickup in the oil and gas investment, at least globally. So I think that led to some increase in demand. And then the government's Jal Se Nal scheme, I think that created a huge impetus in terms of demand, and many of these companies got huge orders and sustained improvement in profitability. Now we've seen that most of these companies, be it Maharashtra Seamless, Jindal Saw, or if you come down to the plastic pipe companies, I think they have reached a level where valuations seem to be pretty high. So I think, and the momentum of growth also could slow down over the next couple of years. So I think to that extent, doesn't seem to be an attractive sector right now for new entry.
Point taken. I just wanted to put on board a couple of these auto stocks as well. While M&M is actually doing very well for itself, it's Bajaj Auto which is coming under pressure. Bajaj Auto might of course have that technical factor that today is a record day for that buyback as well. So people who were holding out might be liquidating today. But within the entire auto pack, what's the view, Sandeep? Because the street is clearly divided. The actual factual data suggests that there's a bit of a slowdown in terms of retail sales. EV isn't picking up, but the perception that the market has and the opportunity that brokerages, etc., are talking about is at the other end. How should an investor approach it right now?
I think auto sector should be looked at constructively because one, valuation, except if you among the top tier auto names, if you see X of TVS Motors, the valuations of the other companies are not yet excessive. They have tailwinds going for them in terms of input prices being under control. Secondly, people are moving up in terms of the value chain. So even if volume growth is 7-8% or thereabouts, the value growth could be upwards of 15%. And if, as is being predicted, the El Nino ends, we get a La Nina year combined with post-election demand boost. So it's a decent sector to be in for investors. So I would think that there's nothing negative per se, except for the fact that if stocks zoom up in a straight line, always they'll give a correction, and that correction has to play out.
Okay, Sandeep, on that note, we let you go. Appreciate you making time and speaking with us today. So that's the view on auto sector as well. Quite constructive. Nothing that should materially put you off when you look at that sector. In the meantime, just tracking some of the stocks which are buzzing around. Pull up a Swan Energy. That's suddenly spiked up. Greenlam Industries is the other one in focus. There was a big India Wood exhibition also that happened, and the commentary from there seems to be positive, at least for the plywood industry. Look at the big spike on that one. Galaxy Surfactants is the other one that I'm watching out for. On the losing side, Welspun Corp is coming under pressure, and ditto can be said for Jyoti Labs as well. At least those are the big movers in the last few minutes. But at 3 o'clock is the time when we'll also start seeing the adjustment of the MSCI flow. So we'll quickly get Somit to join us to talk to us about which are the stocks which are likely to see big inflows and outflows on account of the MSCI readjustment, because usually we do see that big move happen anywhere between 3 to 350. But in the meantime, let me take this opportunity to take the closing trade ideas from our chartists. Nuresh, you go first.
So continuing with the same recommendation, which is Tata Communications, that has been holding on nicely in the current market conditions. Till the time it holds above 1900, remains a buy at current levels for a move to new all-time highs.
You, Kunal.
So Hindustan Copper is something which is looking very charged up today. So quite a strong momentum for the stock coming by, and a breakout also on the early chart. So would look to trade the stock on the positive side.
Yeah, very good momentum on Hindustan Copper.